Welcome. Thanks for stopping by. I'm Digital Micro. You're on the Digital Micro Trading Journal. Day trading for ROI payout, no trade recommendations, just a trade journal. And what I'm doing this weekend for 2323 is a journal moment about time, price alignment cycles, and process discipline. They go together. Most times when I look at a post, I don't see a lot of FinTwit posters really going into time cycles, time alignment. Time is everything. And I saw in my own trading, when I look at my journal, I didn't emphasize enough and backtest enough favorable times. So since doing that this year, definitely I've gotten better results and I include it on my process discipline. So patience and specific operational hours only are very key. And the other thing is going through this process. One of the reasons I do this video journal is to follow through with other time frames that are much higher to see what the overall narrative is before I dive into real micro time charts like the 1 minute or 5 minute to pull the trigger. So we're going to go through just some real quick examples, monthly, weekly, daily, and 4 hour. So let's get to it. Monthly chart here, MES, S&P 500 micro future. So what is this black bar? This is a down bar from last April. Compare that to the April we've got right here with this little speck of green doji candle, and we're already 3/4 done with April, 5 days to go before we close it out. So again, what happened a year ago, April, afterwards was look at this down candle. And we just stayed down. I'm not saying it's going to be a repeating pattern, but here's the deal. This line here, you can just barely see it above the red 3-week equilibrium. This is the new week open gap. So I marked the line from last week's new week open gap, and I ask myself, okay, in 2023, where are the bodies of the candles that have touched that new week open gap for 2023? Are there any? And the answer is no. This is the first green candle of the year, February, March, April. We've got candle wicks. Wicks don't count. It's the bodies of the candle. And the question again is, where's the body covering this new week open gap? It hasn't happened. We've poked our head so far in the drawn liquidities at different points in time. Here in February, we had a drawn liquidity above, and we just recently did one also here in the month of April, but the bodies have not been able to clear this new week open gap. So that's my takeaway here for this monthly, because the whales hide in the monthly, and this price action with the very small range bar is tipping the hand here. Is if there is rocket fuel to go higher, it's not showing up in April. And again, the seasonal tendency here to go up in May, June, July isn't really in alignment with the past. Let's go to the next chart. So basically the monthly gave me the beginning of a narrative, and I go down into the time frame for the weekly, and what these red triangles pointing down are the number of weeks where the candles rallied before they hit a downtrend. So last year going into August, we had a 6-week candle rally. From the October lows of last year, we had an 8-week candle rally. This year, we've had 2 major rallies, 6 weeks each, the recent one being last week. So again, I'm paying attention to time, and I'm counting the time and quantifying it and filing it and comparing it. So I want to be in alignment on what these rhythms and cycles operate on. And again, the weekly is a giveaway here, and I'm paying attention to it. And oh, by the way, here is an order flow cell. Now, this could disappear next week, but the point is we closed the week and there it was. And I'm looking again at fair value gaps below that are still open. I'm looking at equilibrium points, both for the 3-week and the 6-week below. So all this is something that I'm going to look at because we've got big earnings coming out this coming week, and the week after it, we've got the FOMC. So a lot that's going to be looked at in the coming 2 weeks, and I want to know exactly where it is on the big picture. Next chart. Okay, I'm going to further align to the 24-hour chart so you can see the daily here. Friday's closed. New week open gap that I pointed out so importantly, and where it was on the monthly and weekly, and here it is. So we closed the week below it. And what I'm looking at is drawn liquidity lows down here because, again, this is the 331 50% equilibrium, 4110. That's an area of interest. You can see this line here. And then below that, the fair value gap weekly here that's been untouched. So those are my levels. Previous new week open gap above it, 4120. And you can see here, we did hit a previous new week open gap in the week, Thursday, Friday, and we really only spent 3 days above that previous new week open gap of last week. So this will be really interesting. 4140, that's a zone. I'm going to watch it. I'm not sure if we've got 4170 in the cards for a revisit, but if we do, I can tell you what, I'm not going to be long. So there we go. That's the 24. Don't want to spend too much more time on it. We've got one more chart to review. Okay, I've really gone away from the 60-minute chart and I go more to the 240, and then I transition from the 240 to the 15, and I love that because if I'm going to be a day trader, I better be aligned to this 4-hour chart. So here's the pattern. Green bar, high, body not violated. Another green bar, high, body not violated on the next one. This is a bearish order block. It's basically inverted, and I don't expect price to break it next week. It could, but that's not the expectation. Green bar, high, next bar, not violated. Again, drawn liquidity, previous new week open gap, green bar, body, not violated. The next bar, hitting drawn liquidity, double tap on that. So you see the pattern here, 1, 2, 3, 4, the green bars, not the wicks, the bodies are not being violated, trending down. So I'm going to be looking how we open and see the 240 bar, 240 minute, 4-hour bars. That's the pattern. So that kind of wraps it. Time is the first ingredient in the recipe for price delivery. So my major thing is make it all about alignment to time cycles. Very important in my personal trading, and that's why I'm putting it in the journal, so I make that even more pronounced in the next coming weeks. Thanks for watching. Take care.